We're 90 minutes before the open on Monday, January 31st, the last trading day of the month. Hello, traders. Let's take a look at what happened last Friday. UNG was the stock that I highlighted. I loved this breakout above the 100-day moving average. I loved the breakout above this horizontal resistance. You can see we had a red candle testing that 100-day moving average. If you're swing trading this, you need to watch that support. It needs to hold. You don't mind it moving sideways for a couple of days, but then you want to see it grind higher. You can also see a downward sloping trend line on a longer term basis. There is a seasonality component to UNG. This is not a stock, it is an ETF. It is based on the price of natural gas, so it trades like a commodity. So it does not have earnings. But Pete, you said it was going to go higher. It didn't go higher. Well, first of all, it's not a stock, so it's not going to necessarily follow the market. It's going to follow commodity prices. Let's go into the 5-minute chart, and these are the things that you should have been watching for. About here is where the video came out. So set an alert at the high of the day. Boom, here we go. 3 nice stacked candles. We know it's above a major moving average. Hey, this could be a good entry point for us. So if you buy in here and you see absolutely no follow through on it, chopping around, no relative strength. Let's put up the 1 OSI indicator so that we can see how the stock is performing relative to the market. Well, you've got the market starting to firm up a little bit at this juncture, but you're not really seeing any lift off in the stock. So if I'm in here and I see this long red candle right afterwards, and I'm probably in near the high of the day, I'm going to place a limit order to exit at the high of the day, see if I can scratch it. I'm also going to find a point where I can stop the trade out if it starts to move against me. This low point right here would be logical. Yes, if I were swing trading, I could go with the low of the day. If I were swing trading, I could also use a close below the 100-day moving average, not intraday move below the 100-day moving average. Swing trading, you really want to go on closing prices. So you want to monitor those swing trades 5 minutes before the closing bell. At that time, you can pretty much tell if the stock is going to close below that major support or not. That's when you would make your decision. Otherwise, let it move around during the course of the day. You're going to see a lot of volatility in stocks, especially on major technical support or resistance levels. You're going to move through those levels. How it closes is much more important. Back to UNG. So if you're in here, you're going to try and scratch the trade after you see this kind of choppy movement. You get a breakout, you want to see big volume. It did have nice volume. And then you want to see follow through buying. Didn't happen. So put your order out there, see if you can scratch it. You would have been able to scratch it here. Wouldn't have been stopped out here or here. And you'd be able to go to the sidelines and evaluate what's going on with the stock. If you're looking for a trading opportunity, day trading opportunity, I like this stock on a swing basis, so I would be less inclined to short it because I like it on a longer term basis. But if you're just going to follow the system, you would go, okay, we have relative weakness here. We have an upward sloping trend line that's breached to the downside. This would be a good entry point for a short. And you can see how that move gained a little bit of traction, took out the low of the day. So that's how you would have traded it. So UNG, it's a commodity. Always know what you're trading, know the underlying. Let's go to the market right now. Man, did we have a great day. Holy cow. Please watch the video from Friday. I packed so much information into that one video that I could break it into probably 10 different videos, but it gives you context throughout the course of the day and through a longer term perspective on what was happening on the S&P 500. I'm going to do that right now. I had mentioned a longer term downward sloping trend line on an H1 basis using an hourly chart. And I had mentioned to you that if we broke out above that downward sloping trend line, the market was going to go. I believe it was right about in here where I started to see that downward sloping trend line tested. I did take a position in some, I call them lotto options. They were the SPY 436 call options. I paid $1.95 for them. You could see it on the video. I didn't see the follow through that I wanted to. I got these long tails above body, or wicks as they're called, and I could see that there was resistance building. I also had my 10p indicator starting to crest. I'll expand this a little bit. You can see how it's starting to roll over in here. I didn't like that, so I put a limit order out there. I sold them for 15 cents higher than I bought them. I did not add to the position. And I thought, well, let's see what materializes out of this bearish 10p cross. So right in there, you get your cross, things are heading lower. Now all of a sudden we're starting to break technical support. We've got a small little upward sloping trend line, got a little sell signal here from the system. So yes, prudent at this juncture to wait to see what happens. I'm going to put up an indicator. It is the VWAP, and I'm going to add that so that you can see. I don't use VWAP a lot, but I do have it on my chart, so I'm certainly aware of it. And the VWAP is the volume weighted average price. If you took all of the trading through the course of the day, this is the average price. You can see S&P heading up, it's heading up, then it starts to flatten out in here as the S&P 500 does. This was very interesting because we saw long red candles stacked on that bearish 10p cross. This was pretty dang bearish. Now, you would see a pause typically, and then you would waffle around because these are 5 or 6 stacked candles. Pretty heavy selling, and then you would maybe get some continuation, and then eventually you would bounce. The tell on Friday was the vengeance that buyers came in and reversed this drop, sold it off, and blam, rallied it back on heavy volume and took it right through that downward sloping trend line. This type of price action off of that VWAP tells me that institutions were watching that very closely, and they said, hey, we want to buy here right now. We didn't think we were going to get a chance to do this. So this is a bid check, as I call it, because they're trying to see what's below there. Can we get anything going on the downside? When they see this type of buying, then they know, uh-oh, anybody that was running programs in here looking for continuation to the downside saw these candles and went, uh-oh, cover it, cover it. There's buyers down there. And they didn't just cover it, they probably went long and they pivoted instantly. Downward sloping trend line broken. At this juncture, we are all loading up on that buy signal in the chat room. And I told everyone this is a major move. I can tell by the price action, I can tell by the volume. Stick with your positions. We should close on the absolute high. So as all of this is transpiring, we start to get this breakout. Now we're through the high of the day. Big volume starting to come in also. Now, there was one candle in particular that I was watching, and I'm like, okay, this is a shakeout right here. You could see this long candle right here. Yeah, so what? Well, it's a beautiful candle. It is a bullish hammer. So when you're in the trade and you've been in here and you start seeing things pop and you're really excited because you've got a nice gain in your position, this candle actually looked very, very different 4 minutes into the candle. It looked like, oh, we had this little blow off buying climax. We had this little red candle in here to show that there was still resistance at the high of the day. And then we had this gigantic red candle down on its low, engulfing candle even. See, it was higher. Engulfed this entire green candle. You had to weather that storm. And when sellers saw that this was bona fide, this candle turned from very, very bearish and people bailing out of their positions because they wanted to lock in these profits to, hey, this looks super, super bullish. They tried to sell it off, and buyers came in so strong. They finished this candle on its high. When I saw this, I was already long. When I saw this, I'm like, okay, got to weather the storm. We'll see what happens in here. When I saw this candle close, I told everybody in the chat room, hold on to your positions until the very last tick of the market because we are going to rally like mad because asset managers have been looking for an opportunity to get long, but they wanted to have confidence that support was in on a longer term basis. So that's what we're going to take a look at right now. But once this feeding frenzy started, see you later. That was about a 40-point S&P rally. So let's put up the SPY and let's take a look at what's going on a daily chart. You can see how we've got, similar to this area right here, multiple tests of support. This is what buyers want to see. Got above the 100-day moving average. Okay, that's good. Get a little bit of an aftershock in here, which, by the way, I've got people asking me, is there any chance that we could go down to SPY 420? Of course there is. Could we go to 430? Of course there's a chance that that's going to happen, especially after heavy selling like this. It would be foolish to think that the market is going to just simply go straight up. This is a big sell-off. We've breached major moving averages. These are major support levels. It's been a very long time since we have consistently closed below the 200-day moving average. That's a sign that the character of the market's changing. There is some uncertainty out there. So yes, we can expect aftershocks, we can expect retests, but at this particular juncture, with the way that the market closed on Friday, I believe the chances of us rallying up to the 100-day moving average are much greater than us trading down to the low from January 24th. And I'm saying that in terms of which one happens first. I say we test this before we test that. If that's my thesis, then I have a way to position myself directionally. And that's what I'm doing. I am long. Overnight futures, I think they're down about 15, 17 points, something like that. So we're seeing a little bit of give back on that huge rally that we had on Friday. But asset managers are watching this. Doink, 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 doink. Yeah, there are buyers lining up at this horizontal support level at 430. Now they're simply waiting for signs that more and more buyers are starting to overwhelm all of the sellers. We've also had excellent earnings coming in. So just from a technical standpoint, I love it. I think we're going to be above the 200-day moving average probably in the next day or two. We've got earnings season starting to heat up. A little bit of fundamental analysis that I'm going to give you. We're in the heart of earnings season. Mega cap tech companies are starting to report. Apple posted a gangbuster number. Microsoft initially sold off on the news and then rallied like mad. So right now about 33% of the S&P 500 has reported. And so right now the earnings per share have been exceeded by 24.3% of those companies. That is pretty darn good. And that is better than the 21.4% that people were expecting. 77% of the companies that have reported have beaten consensus earnings per share estimates. That's good. The 5-year average is 76%. So this is excellent. Earnings are on an excellent pace right now. 75% have surpassed the sales expectations. 75% have beaten on the top line. Now that compares to a 5-year average of 68%. So this is all according to FactSet. These are good numbers. Earnings are coming in very nicely. Yes, valuations are stretched. We haven't seen PE ratios like this since the tech bubble in 2000. So yes, there's room for stocks to go down. But companies are also aggressively repurchasing their outstanding shares. They issue cheap debt. They use that cheap debt to repurchase their shares. They see that as a no-lose scenario. So, yes, I believe we're going to see a market bounce. I believe in the next couple of weeks, we should have a nice release up to that 100-day moving average. Well, what happens after that, Pete? I don't know. I'm going to be watching the news. I'm going to be seeing what goes on in China. I'm going to be watching the FOMC statements, the FOMC minutes, any kind of Fed remarks that we have. You have to stay fluid. Right now, you have to stay fluid. You've got to keep your trading horizon, in my opinion, inside of 3 weeks. You can't really spread your wings too much. If I were looking to do some swing trading in here, I'd be taking advantage of inflated option implied volatilities, and I would be selling out of the money bullish put spreads below this technical support. Can I do it on the S&P 500? Yes, you can. Especially at this level, your stop would be a breach and a close below, say, SPY 428. But yes, you could do it on the S&P 500. You can also do it on very strong stocks. I believe stocks are where you have an advantage. Let's take a look at what happened to option implied volatilities. I'm also getting questions. Pete, UVXY, why are you using UVXY? Why aren't we using VIX? Same reason I use SPY. Not everybody has access to VIX futures live data. Not everybody has live S&P 500 data. Consequently, I'm using UVXY. I want to measure what's happening in these short-term option implied volatilities rather than to use VXX, which is longer term option implied volatilities. And yes, I can compare the two as well. Right now, short term option implied volatilities are very, very high. They call that backwardation. So in any event, UVXY, everybody has these quotes. So let's take a look at what it did on Friday. We would expect it to go down. And that's what started to happen when we started to get this liftoff. And that is exactly what we wanted to see. We wanted to see it get annihilated. Upward sloping trend line, breach to the downside, weak relative to the market, got a sell signal here, got your breakdown below the low of the day. See ya later, market liftoff. So yes, institutions right now are starting to sell option implied volatility because they see some of the uncertainty coming out of the market. I expected to see that Thursday and it didn't happen. You would expect option implied volatilities to go down after the FOMC statement because the cat is out of the bag. The uncertainty is gone. Option implied volatilities remained very steady on Thursday, and that's why I could tell that we were not just going to lift off. But now I'm fairly certain that I've seen enough selling in UVXY and enough of a rally in the S&P 500 to tell me what? To tell me that an hour and a half before the open on Monday, I am going to view any overnight futures weakness, a 15-point drop in the S&P 500, I am going to view that as an opportunity to get long. So we're giving back a little bit, a little bit of this move right here. Okay, cool. It's going to give me an opportunity to buy. So what in the heck am I going to be looking for this morning? I'm going to have a gap down formation. So it'll come into here just a little bit. I'm going to be watching for a couple of different scenarios. First of all, on a 5-minute basis, I've got the 10P indicator. Look at that entry point yesterday. Let's take a step back. I had a lot of questions about 10P. I'm not telling you any of the inputs. I'm not telling you how it's calculated. It's a proprietary indicator. It took me a long time to develop. You can get it through Option Stalker, but look at this buy signal right here. Look at that trough right there. Was that a nice buy signal? Get a little bit of an exit right here. We got a bearish cross, okay? So you get short in here, you scratch it because you're basically out of the trade at the same price that you shorted it at. Okay, no harm, no foul. Then it kind of waffles around. In here, when you're compressing, there's no indicator in a compression that's going to be accurate because the stock is doing nothing. It's flatlining. It's a pancake. So this is an area where you want to do absolutely nothing. Upward sloping trend line comes through about like that. Bearish signal. Yes, you could get short in here. Start compressing down here on the low of that red candle. Okay, well, the market's been all over the board. So if I'm trading futures and I start to see that they can't whack it down, I should be taking profits. Wait to see what happens. Lo and behold, you get your bullish 10P cross right in here. Beautiful signal, downward sloping trend line. You know that's a good entry point just because of all the other things that I had mentioned to you on Friday. So yes, now you've got your market backdrop that's so perfect. You know the market's going to go higher. This is when you want to be out there scrambling around looking for opportunities to get long. I got to show you a stock that I highlighted in the chat room. We do something that we call lotto trades on Fridays. We're looking for opportunities where the stock has excellent momentum, and we buy options that are going to expire in the next hour. Well, when we had that big liftoff in the market, MA was a stock that I highlighted about an hour before the close on Friday, and it was the 372.50 calls that I had shown, and those were out of the money by about 80 cents. They were trading at approximately 90 cents at the time. Ha! These stocks closed at $10. And all you had to do was wait a couple of hours, an hour actually in this case, and you would have made 10x on your money. So we do find these trades. Perfection is required, and I teach you about that perfection because most of those trades are going to fail, and you need to make sure that your timing is perfect because these are like an ice cube on a hot Arizona highway. They are melting like crazy because time decay is working against you for these trades. But if you nail your entry, market tailwind, and you nail your stock, fantastic relative strength, 10 SI greater than zero, stock never flinched on this. Boom, 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 boom. Market tanks, let's say. What did the stock do? Huh, nothing. Stayed in the compression, preserved its relative strength. When you get this, it does this. So, a little bit on lotto trades. You can find videos that have lotto trades. We're going to try and find a trade in the next few minutes that'll set up well for us today. So, I like the market. What pattern am I looking for? Trying to think if I'm going to see a gap down and an instant reversal in the last week, and I can scroll back very quickly to try and find one, but I don't think I'm going to be able to find one quick enough, so I'll just tell you the different patterns that might unfold. The ultimate pattern for me today is going to be, we've got a 1 OP indicator that's going to be cresting right on the open, so I'm going to be watching it while it rolls over, and that's going to give us time, hopefully on the open, to watch the market. I don't know that there's going to be a lot of time today to get long because I suspect that buyers are still going to be very aggressive. Any asset manager who is not able to get long in here on Friday is going to be biting their nails this morning, and any little dip that we're going to see on the open could reverse instantly. So we could get a red candle down on the open and then stacked green candles, no overlap, looking just like that. If we open lower and we get this, buy, buy. You could even buy stupid if they are beautiful like this. Long, no overlap, open on the low, close on the high, open on the low, close on the high, open on the low, close on the high. Not this crap in here. This and only this. This has overlap. This is trash right in here. Okay, we'll talk about this kind of formation in a second. If you get a little pullback on the open and then you see this, you know we're off to the races, especially if it comes in on heavy volume. Just buy. You've got to get long. You can scale in, but it's just going to keep moving higher. So if you're nervous, and this is a very hard pattern to buy into because you're always thinking, well, if it did this, I'm not going to be the chump that buys up here and have it reverse. Now, this is called buying stupid. When these candles look like this, you've got to get in, at least get some size on, and then you can continue to add on strength. Keep an eye on UVXY, make sure that VIX is coming in. But if you get this, you're going to have it dropping. So I wouldn't worry too much about that. So first scenario, get one little drop on the open and then this, you're going to want to get long. Now, that's not the kind of situation that I would like to buy into on the open, but if we go back on the daily chart, and this is why context is so critically important. What do you mean context? What the hell is context, Pete? Context is what has happened before. Where are we at in the range? Well, we're down on major support, right? Tested, 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 tested. Yes. Okay. This has typically been a really nice area to get long. And once that support is in, what do we typically see? Well, when buyers start getting aggressive, you start to see this type of candle. And as a gap and go. So today we're going to open a little bit lower, and then we're going to see a long green candle closing on its high. Well, what happens after that? So now we've started to break out. Here we had a downward sloping trend line, multiple tests of support. Okay, yeah, this looks pretty good. So you get this type of open on the low, close on the high, long green candle, which I believe we're going to get today. Then what happens? Gap up. See you later. Goodbye. That's why you want to be watching for this today, because if we get a little bit of, we come into this green candle just a little bit on the open, maybe we give back 15, 20 points, we still have all this support, and then we race higher, it's going to leave a candle with a little tail underneath it, and then a long green candle on top. Well, if you saw a long green candle like this, and then a long green candle on top of that, and you took that pattern and you looked anywhere back on the chart over the course of the last year or so, like that, well, what happens after I see these two candles? That's what happens. You get follow through. So this will be a good entry point, particularly if we see that type of pattern unfolding. So first scenario was a drop instantly with this. I would only give that probably a 20% chance of happening. I think that more likely we're able to see just how much of these gains we can give back, and we'll be watching this 1OP indicator roll over. As it rolls over, we want to see how far down it goes, and during that bearish cycle, how much do we retrace? Ideally, we preserve most of this. That open from that last candle, that's a support level. The open from this candle, also support level, and that comes in right around 440. So I would look for 440 to be roughly support level for today. Really would like to hold this candle. That open was at 439. So I don't want us to retrace too far during this bearish cycle. But the more that we come in and the way that we do it is going to tell me when support is forming and how much time I have left before I have to start buying. So if the market opens lower and then we instantly start seeing garbage like this would be a sign of support because it shows you that buyers are coming in and the market's just kind of going sideways and there's no momentum to this retracement. That would be a good sign. This is going to give me maybe 20, maybe 30 minutes to find my stocks with relative strength that I can start taking a position on, that I can start setting alerts on. Another possibility is that we have a little bit more of a pronounced decline. Maybe it looks like this. You get a red candle, then you get barely another red candle, then you get a green candle mixed in here. You've got a lot of overlap in the candles. And then you get another little red candle in here, and then instantly you start moving higher. Okay, that would tell me that buyers are coming in and that we've got a chance to take out the high of the day, which remember, we're closing lower, so we would take out the opening price and move through it. If that happens, then we'll move into the gap. So imagine this price pattern happening right here. And when you see that, and you've only retraced to say this price right here, which is about 439, and then you start climbing, you can be pretty sure that we're going to challenge the high from Friday, and we'll be off to the races. I'm bullish. I'm bullish on a swing basis. Yes, there has been a lot of two-sided trading. Look at the chop that we've seen. Even this is not the strongest of rallies, okay? Because you got a lot of overlapping candles in here, then you compress. This told me here, and I did have this question actually. It was, Pete, how did you know that you might get the market rolling over here? How did you know that this bearish cross right in here was not going to be a bullish divergence. A bullish divergence would be 1OP indicator down, 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 market up, up, up. Well, first of all, on these divergences, you need to give those time at least 15 or 20 minutes. And if you had the 1OP indicator coming down, you would want to see the S&P 500 holding very steady, maybe even drifting a little bit higher. Now, these divergences happen only about 20% of the time. 80% of the time, whatever 1OP says the market's going to do, it does. It is a predictive indicator. It is also early. And so 80% of the time, you want to be expecting that what it's showing you is going to happen. 20% of the time, you get these divergences, and they are super, super powerful because they confirm trend strength. And they happen when the trend has been strong. This is not a strong trend. Overlapping candles, mixed candles, compressions. This is not a strong trend. So this is likely to produce some selling pressure. If I saw this in a bearish cross, like I've just explained, then yes, I would be expecting a bullish divergence because I have strong trend strength. So, another lesson for you. Possibilities today: temporary pullback, stack green candles like this, get in early, ride that baby. We're going higher. Scenario 2, we come back, spend a little bit of time compressing like this. That tells you that buyers are still aggressive and you're going to need to act pretty quickly. You get a formation like this where you got a little bit of selling pressure. You're making new lows in here, but overlapping, bounces all the way. Let her come in. That's going to give you just a little bit more time to get long. And once you get that window of opportunity, you're going to have to be quick to the trigger because I suspect we're going to be lifting off. This is an hour before the open on Monday, January 31st. Pete is looking for a rally today. It's just a matter of how far we retrace and how cheaply we'll be able to enter these stocks. So when you're watching the video that I post Tuesday or Wednesday, know that that's where I stand right now. So let's take a look and see what we can find. I'm going to go into a couple of searches here, try and find some stocks that'll set up well for us. This is earnings season. So the first search I'm going to do is go into buy into earnings. These stocks rally into their earnings announcement 75% of the time or more, and they've done so over the last 3 years. I know this because I collect the data. So if I look through these lists, I want to find stocks that are forming nice support, and I'm going to go under the premise that they are going to move higher. These are buy signals across multiple time frames: 5-minute, 15-minute, 30-minute. If I expand this window, I can see what they're doing on a longer term basis as well. So for instance, this stock, I don't even know what the symbol is. I can tell it's strong on a long-term basis: 1 hour, 2 hour, 4 hour, all green. And that is PFE. So let's take a look at PFE. But we know we have a longer term, a stock that on a longer term basis is strong. BMY also. Yes, I also want to look on a shorter time frame. These shorter time frames are easy to see because we're day traders for the most part, and we want confirmation on a short-term basis across multiple time frames. So what exactly does this mean? Let's go into BMY and I'll show you. It's a very efficient way to look at data. BMY participated nicely in that market rally, but if BMY, you'll notice, is not on a current buy signal. CVS is on a buy signal. There's your buy signal. Go into a 15-minute chart. There's your buy signal. Go into a 30-minute chart. There's your buy signal. So CVS lines up well across multiple time frames. Well, that's good. That makes it super easy to zero in on stocks that you might like. So this particular search is showing me stocks that like to rally into the earnings announcement. Let's go back to the D1 and take a look at a couple of these. AMD, Let's take a look at that daily chart. I can't buy AMD in here. It's not through any kind of resistance level. I've got to see signs that it's moving. Amazon may not be bad. GTC alert, click that. That's horizontal resistance. That's the halfway point of that red candle. Yeah, if it gets through that, I would like to know about it because I'll probably be selling an out of the money bullish put spread that expires before earnings using that 2760 level. Hover over 2-3. I'm not going to have a chance because Amazon announces this week. But that's the process that you would be going through. So I'm going to go to CVS. I love CVS. Look at that breakout. You know it's been on my radar for a while. This is a beautiful stock. I think it continues to go higher. And you may not have an opportunity to sell an out of the money bullish put spread on this, but you certainly can day trade this from the long side. I love that breakout right in there. MA was one that I showed you that was really nice. Continue to quickly go down this list and see if anything else is sticking out at me. Daily chart on Snap, there's nothing going down here. PFE, we had mentioned earlier. PFE, downward sloping trend line, breach to the upside, likes to rally into earnings. Earnings announcement on 2/8, so we do still have one option expiration we can key off of, and I would use a support level down around 5160. It has to get through this 50-day moving average. Click GTC, double click on the top of this candle. If that's breached, I'm going to get an alert, and it's going to be through the 50-day moving average. And Pete is probably going to be buying it if it has relative strength today. I like PFE. I'm going to go into a different search though because I want to go into, which by the way, we can also see strong after earnings. These companies will have announced and are showing strength. I don't have anything in that list right now. I'm going to look at heavy buying to see what popped up on Friday. V, letter V. Similar to MasterCard, V also credit card processor, downward sloping trend line, breach to the upside, post earnings rally. Love that 200-day moving average right there. Yes, you could probably sell an out of the money bullish put spread keying off of that 200-day moving average. You could go down to the open from Friday at that 220 level. That would be a pretty safe place to sell that. I do like it. I'd want to make sure that it maintains that 200-day moving average. That would be your stop. And on a day like today, where you've got the market probably rallying higher, look for continued relative strength. So yeah, I like that. Apple, downward sloping trend line, a steep one through the 50-day moving average. I like Apple. There's your earnings announcement. Yes, Apple put in a great day. And I'm going to have to conclude this. So many ways for us to find these stocks. You can see how, with this market rally, Apple was continuing to add to gains even after a big move earlier in the day. Gap up, long red candle, checking in here. Now you can see how the stock starts to recover, gets back above that opening price. This is where you would enter. Good relative strength in here. Got a nice buy signal. Really nice. Take profits in there, in here, take profits there. Okay, nothing much happening. This sell signal you had to be a little bit careful with. Downward slope for a couple reasons. Number one, we like it on a daily basis. It's been strong all day. It's been gapping higher after earnings. So shorting here, not a particularly good idea. But if you did, draw your downward sloping trend line, use that as a stop out point. But you would not want to be shorting this after the price action that you had seen on Friday. I like Apple. Apple could work today. CVS, that's going to be my other one that I'm going to put as a long of the day. We'll check those stocks tomorrow. More importantly, watch the open of the market today. Look for those entry points for long positions. Start setting alerts on stocks that you like right out of the gate. You can even do it pre-open, just as I have been doing. You don't wake up and turn your screen on at 9:30 Eastern time and go, huh, let's see what's happening. Let's see what's coming up on the searches. Your analysis should have started Sunday night. Should have been watching what was happening in the overseas markets Sunday night. Monday morning, my day starts at 5 a.m. Central Time. I'm looking for stocks. I'm setting alerts. People go, how did you find that? Where did that come from? How do you do this? It comes from preparation. So just like I've been doing, all of those alerts should be set on stocks that look like they're going to be flying. After the open, boom, 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 boom. I get pop-up alerts. They're delivered to me on a silver platter, and I know that those stocks are getting through critical price levels. Preparation. That's all I've got for you today. Got to get my pre-open market comments out. Please make sure to look at my description area. If you want my pre-open market comments, you can follow me on Twitter. Good luck with your trading. Look for a market rally. Get long. See you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.